Stock Analysis, and we have a very special guest today. This very, very small puppy. Today we will be looking into AMD. We have a guest appearance for the show today that will definitely add a lot of value to the stock analysis. But we're going to be getting into AMD. We're going to be doing a full financial analysis, looking at their recent earnings reports, seeing how their metrics have been doing, and just getting an idea of where the company is financially. Also, yes, I did just get all my hair cut off. I think that is an excellent development for the channel. We'll definitely be getting a lot of new viewers now. So anyway, let's get into AMD. So AMD is primarily in semiconductor businesses. They have things like data centers. They make gaming hardware for computers as well as some other hardware. CPUs, GPUs, whatever, really, computer stuff. So 172 billion with a B dollar market cap. So this is a very large company. Target price is at 146. Long-term growth rate is at 27%. So we are very well below that 146 mark at the moment. If you take a look at, let's go to the chart here for a second. So the company has been really suffering recently. Now, I did draw a fairly long-term support line that they have been kind of growing based off of. Now, does that mean that they're going to go all the way down to this $85 range or $80 range? Probably not. If I had to guess, I think they've been suffering for a while. I think they are starting to turn things around. They are well under 50% from their all-time high. So that is something to think about when buying the company is, do they have enough value gained in the past, let's say, year and a half, just about to where they can reach all-time highs? In my opinion, they do, but we will get into that in a moment. So first of all, let me get up the earnings report here and see what we can see. So first of all, come on, gotta wait for it to load, of course. I'm not home today because I'm watching my sister's dog, as you saw in the intro, so the Wi-Fi might be a little bit slower. So getting into the metrics recap here, data center revenue fell short fairly significantly. Looks like the client side revenue and the gaming revenue probably canceled that out. Their embedded software missed slightly as well. Gross margins beat estimates, and a year ago, operating expenses were a little bit higher, very slightly, actually. Well, about $800 million higher. Or no, I'm confused there. About $80 million higher, so nothing too crazy there. Operating margin came in slightly below. However, they are up from a year ago, which is pretty solid. And then operating income. Okay, so this is a little bit more important. Actually, I would say a lot more important than revenue. And their operating income massively beat in their data centers. Massive increase from client side. Gaming fell short, and then their embedded also fell short. Free cash flow just over $1 billion. Let's take a look at the street takeaways and see what they're saying about it. So first off, shares were down 10%. Oh my, let's see what it's looking like after the earnings report. Sorry for the tons of move. Oh, what did I just do? I just got rid of the chart. Let me back out of here. Come on. Great. Messed it up. Okay. Basically, what I just did was I overlaid the MACD on top of it, which we do not want. So looking at the chart since the earnings report came out, they took a pretty steep drop and rose a little bit, and now they're still lower than they were. Personally, I'm going to go ahead and say that the company's probably going to continue dropping just based on how negatively that earnings report was taken. Let's see what they said. Management guided ahead of the midpoint, which is fairly solid. Analyst opinions were divided. where solid performance in client and gaming as well as server share gains were offset by weaker data center revenue and concerns over data center growth. Okay, so basically, data centers are their largest form of income, and they're projecting fairly flat growth as well as um, fairly weaker revenue in that sector or in that part of their revenue. So that is definitely why the stock went down so much, which does make sense. However, I feel like with the way their client side revenue has been increasing, let's just go back to that. Um, Client has increased from 55 million to almost half a billion in 1 year. So while it doesn't really, it won't entirely make up for the data center losses. I feel like it will soon. Gaming revenue came in above as well. However, they're losing profitability on that. I still think that they are making up for it more than enough in other places. That's just my opinion on the matter. Several analysts have lowered estimates due to this slowdown. They do have good AI positioning as well as they've stated here. So looking at, let's try to get all of it in one screen here. So overall, maintains a perform, target lowered. So 2 out of 4 lowered targets, and the other 2 just maintained. If you want to read through everything here, go ahead and pause. I'm going to keep moving through here. So just looking at the chart, I think they are in a very good position. Um, I personally kind of believe in the long-term growth of the company. I think they are a much better choice than something like Intel, which honestly wouldn't shock me if Intel gets either divided up and bought out or possible bankruptcy or something. Um, their debt load is insane, but I think they are a much better choice than Intel is. Will they be a buy fairly soon? Yes. Will we see that though within like a month? I'm not really sure. It is always the possibility that they will drop down to where this trend line is. Um, it's just really a matter of when it will happen. Let's actually get that impulse MACD back up here. So, and the settings are different. All right. You know what? I'm just going to ignore that for this one. One thing that I do take as a positive sign all the time is workforce growth. And if you look on the very bottom indicator here, their workforce has been growing very significantly every single year, including if you look when they were at this last high, which to be fair, their last high was in 2024. But the high that they are now well below in 2021, they had almost half of the workforce that they have now. So, in my opinion, that's kind of just value directly being added by having more people contributing to the company and adding value to the company. So, in my opinion, it is always a good thing when companies are increasing their workforce, especially kind of higher growth, high technology companies like this. So, excuse me. Anyway, going into the financial statements, sales growth over the past year has been really solid. Gross income massively beat. Net income, huge beat as well. Their net income has been kind of suffering, especially since 2021, where they saw a massive growth in their net income over COVID. And since then, it kind of fell off, and now they're sitting well below where they used to be. And that is despite massively increased sales as well. So, not great there, to be completely honest, but also it could be good for the future as we're seeing this kind of huge sales growth. It's really just a matter of can they regain that profitability, which we have seen improvements over the past 2 years, but overall it still looks a little rough. I would like to see them kind of get back to those levels though in the near future. Their total shares are consistently increasing, which isn't really the best sign, especially when you have positive net income for so many years. But overall, it's fairly minimal, so I wouldn't say it's anything to be worried about. So now moving into the balance sheet, they are at an all-time high in assets. And one thing I want to point out here, which is just shocking to me, is they had way more net revenue and income in 2020 and 2021, but yet they have 6 times or 7 times more assets than they have now. And that is because of a massive growth in intangibles. Now, I don't really exactly know what those intangibles mean. Um, for some companies, it is like Bitcoin. For them, it is goodwill growth. Actually, they had a massive addition of goodwill as well as other intangibles. I don't know exactly what that means. Now, if you know, please let me know in the comments. I love to learn um, more about the specifics of events that took place. And it's really hard to find those by just looking through like earnings reports and stuff. But that's kind of just what I like to focus on. So if you guys know exactly why they had that enormous increase in intangible assets, please feel free to let me know. Um, Always nice to get some discussion going about things like that. So, debt situation is very good. For some reason, I always kind of had the belief that AMD had a really rough debt situation. They really don't at all. Their debt is fantastic. If we look up here, they have over 5 billion in cash, and I'm sure that's probably going to grow this year just based on how their net income has been doing. Um, so looks very, very solid. Again, only about 2.3 billion in total debt. They have a ton of equity, so their debt to equity ratio is going to be insanely low, probably right around like 10%, which is super healthy. Operating cash flow did see a very large increase. They're almost at where they were in 2021, which is awesome to see. That's still very good. A ton of money is going into acquisitions, which is always good to see. Purchase and sales of investments are a little mixed recently, but I wouldn't worry about that too much. And then debt is being reduced, as we saw in the past year. They put $750 million into debt. And also, they've been consistently repurchasing their stock for 4 years straight now, which is awesome. Um, Free cash flow has essentially doubled year over year, which is great. However, we are still below that 2021 area. I wouldn't be too concerned with that, honestly, as long as it's positive and it's relatively in the same range. I would say that's perfectly fine. Um, Obviously, though, the net income, they do have a lot less to work with the cash flows here compared to 2020 and 2021. So, it's still pretty good to see their free cash flow be this high. Um, anyway, moving on to the ratios. So we're going to see a ton of ratio improvement year over year. However, in the 5 years past, it was much higher. Again, talking about 2020 and 2021, it was much higher than it is now. But we are seeing over the past 2 years, gross margin has been increasing a lot. Net margin has seen increases. Same thing with operating. And if we go all the way down to the bottom here, total debt to equity is at 4%. That is so good. They can take out a ton of debt and be perfectly fine. Um, Honestly, it seems like they don't need to, and I doubt they will. It seems like they're growing perfectly fine without really having any debt. You can see for the past 5 years now, their debt to equity has been under 10%. So they are in a perfectly good position to just continue the way they're going. Um, Honestly, I wouldn't really mind if they took out more debt too, just to possibly invest in increasing their profitability again. Um, but either way, I think the company's going to be perfectly fine. I think the next year will be very good for the company. Definitely going to be, or it is in an undervalued situation at the moment. Um, just compared to, I mean, we saw that year over year growth was really solid. Profitability increased fairly significantly from 2023. So in 2023, they basically only went up. If we look, they started right around $70 a share and ended the year right around 120 ish, right around here. So they basically only went up the whole year, and that was with lower profitability, lower total revenue. And now we're seeing them back at this right around $100 range, and they have better numbers. They're seeing better results. So, personally, in my opinion, I think we're going to see them go back up fairly soon. Now, will there be a little bit of short term pain? Possibly, but I doubt it will be anything too crazy. Um, Really, just something that you have to take into consideration when buying. But either way, I like the stock. That's about it. So, thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.